everybody. Welcome to this week's edition of Vishal and Company. Today, we're going to be talking about Pelosi delaying the vote on the $1 trillion infrastructure bill, the DeFi platform Compound mistakenly sending users nearly $90 million, and Canada's GDP shrinking once again. We have a ton to get over today, so I'm just going to pass it right over to Vishal.
Thanks, Maddie. And damn, how come I didn't get any of that 90 million? I guess because, I got to talk to Joseph about what's the next DeFi protocol token that might make a mistake. But before we get there, let's take a look at the markets. And this week we started off red. If you do follow my work on the Discord channel or on Market Moment, that rejection of the trend line on the S&P, that's what we wanted to see. Technically, we got that. We had a leg down, and as you guys can see from the price action today, big green. Here's the intraday candles of the Dow, the Nasdaq, and the S&P. Market is green here, and yeah, there's a lot to talk about macro. Basically, a lot of people were wondering, okay, are the markets going to continue with the whole buy the dip strategy? And, we're seeing that happen today, potentially, but risk factors, right? There's still the China evergrande issue. Energy crisis. I'm not sure if we talked about it last week about the UK and Europe, but now China is involved. And apparently that's going to be having, that could affect the supply chains, right? We have the Fed actually saying that they're going to taper, and a lot of people worry that that's going to cause a taper tantrum. And next week on Friday, we have the US NFP or non-farm employment numbers, and that's going to be big because the Fed was saying that, hey, transitory inflation seems okay. Now it's only about employment, and from there we can make our decision on when we want to taper. So we have the taper tantrum also added to that. I guess you still have COVID issues, right? COVID and rising cases, that kind of stuff. But I don't think that's really playing a huge impact on the markets anymore. And then we have all the government issues. There was going to be a government closure. That's being delayed now. The big one, though, is October 17th, where technically the US government will hit a debt ceiling and will not be able to pay on their bond payments. And basically the government goes broke. If you've been listening to Janet Yellen and Fed Powell testify to Congress, Yellen sort of spooked the markets, right, by saying, hey, look, government, get your things together because we're going to run out of money. We won't be able to pay our interest payments. We won't be able to pay any benefits to people, and it's going to be trouble. So that spooked the markets. She said that again yesterday. In fact, she actually said, hey, why don't we abolish the debt ceiling? Let's make it not a thing anymore. So we'll see what happens with that train of thought. But that has a lot to do with basically all these bills. They're trying to get some sort of agreement between spending because they want to get it all, together before they come up with a debt ceiling. And there's issues, right? There's issues on how much to spend and where this money goes, but I guess that's government.
Sorry, the real problem, I think, at this point with this infrastructure bill is infighting with the Democrats themselves.
There we go. Yeah, I was going to say
some of them trying to play to a more conservative audience, so they can try and close the gap between what the Republicans are trying to garner up.
Right.
And also just, pork bellies, man. I want to feed my constituents. Like, where's my money coming from?
Yeah. So, Galen,
I got to tell you, brother.
Yeah.
I had to tell you, brother, this kind of thing is the reason why Bitcoin was created. I mean, the kind of statement like, let's eliminate the debt ceiling. I mean, that could actually be the reason why Bitcoin's up today.
It could be. Yeah, it could be. But just quickly going back to Galen, I mean, I think that's an important point, the infighting, because that's why this sort of became a big issue, because I believe the House owns the Senate and the House. So a lot of people thought that this would have been easy peasy. You get this all through, but as Galen just said, the infighting is what's leading to some sort of uncertainty in the markets.
And I don't know what the long-term impact of this is going to be. If the bill does indeed die on the floor, then what's going to happen to the stock market? What's going to happen to the economy? we're going to see some large fallout from this. Now, they may all be posturing right now,
Yeah.
waiting for the midnight hour to finally come together and say we pushed it through. But, you know, things have been so crazy lately, we may not get it coming through. We may have to have like a severely restricted bill, which will be nothing like they promised, and that will have distaste amongst the American populace, as well as the markets themselves. Industry support for, let's say, burgeoning industries like green energy and the EV sector. Most of those survive on government incentives, and if bills like this, well, I mean, there's a much contained within these bills to support those industries. So if they don't go through, they don't get their cash either. So we'll see a downturn in the transition to a new green energy economy. This is definitely going to put a damper on things.
Yeah,
that's true. I think the biggest thing that probably spooked the market was the fact that, you know, the market tries to time itself, which is a weird thing because nobody can, and it's kind of making a forward judgment that if infrastructure is reduced, the infrastructure expenditure is reduced, companies will make either bad investments in the future or make less investments in the future, kind of deteriorating their own profit margins and et cetera, which will kind of force layoffs and etc, kind of filtering back into like the end consumers, which contribute most of, you know, the GDP in the US. And people are expecting that if you contract government spending, you're going to kind of force this domino effect that might not show as of now, but it will slowly creep in as the economy kind of slows down from the transitory inflation that is kind of experienced right now. And I'm like, it is a scary thing to see, but the government has overextended itself during this whole COVID period as well, and it needs to stop at some point. So it's kind of, don't know which side will win out at the end, but they're both sides have their merit. It's like we can't continue to spend more, but if we stop spending, that could crush a lot more people than we're crushing currently.
So what do you think about the whole idea then of getting rid of the debt ceiling so government can spend willy-nilly?
I'm not a fan. I'm not a fan. I think we should all suffer if we have more debt than we can handle, but their objectives are a little different. And I think the US over time can handle it, but they, not to get too political, but they do need different people.
Now, I have quickly, just to, TK, maybe you could put your mind to this as well. I have a question from one of our viewers, Zach Wilcher, who's asking, do you think that the infrastructure bill will get passed before the weekend is up?
Ooh.
So we have basically an hour, right? Hour for the market, sorry. Maybe that's what the markets are pricing in right now. You know, again, I'm sort of with Galen, where I think it might be like a last minute thing. Just tend to see that happen in previous debt ceiling issues.
Yeah, I'm on the same camp as well. Eventually, I don't know if it's this weekend. It depends. It depends how the argument is going on both sides. But I think they will come up with something. Maybe, but I don't think they'll reduce the amount that they want to put on the bill. That's one thing for sure.
All right, well, I'll throw this out there. How likely do you guys think Michael Burry's predictions of inflation and stock market crash are now?
You know, he's kind of been getting a lot of back. I think he was back on Twitter a couple weeks ago.
Yeah, now he's off.
Now he's off again. And he was saying the same thing. He's saying the amount of money that's flowing into the markets and what actually is happening, the price appreciation is not matching. And he feels the same. It's like he says, for every dollar that's going into the market, there's $5 of appreciation. Mm-hmm. He's saying on the downside, they might be the same thing. And that's just his own clever, genius way of saying the inflationary pressures are going to be there. And then the deflationary pressures are going to be the same on the downside. So he's kind of predicting a deflationary recession. It's like they're going to try and prop it up, but the economy is already heated as of now. And then there's the whole rumor that the Fed and they're manipulating the inflation numbers to count things that reduce to 2%. to their 2% target. I don't know how true that. I haven't looked it into
Well,
myself.
I mean, classically, it's been a tactic of theirs is to drop things from the core inflation index, so they don't look so bad, right?
Yeah.
So
But
they
I
do
think his prediction will definitely come through in some way, and he's made a big bet as well on the bond. I forgot which
I
index.
think it was 10-year, wasn't it? Or
I think it was the 10-year. Yeah.
10-year bonds. Yeah. Yeah. So my take on that is I think it might already be beginning just because of this trend break line on the S&P. Again, we're going to have to see, but technically the markets are sort of telling us that there might be some, I don't want to use the word chaos, but maybe some bad news. And, we've been talking about the dollar. That chart pattern has been telling us that big money's been buying the dollar for some reason. Maybe it's because they believe the Fed's going to taper. I don't know. Or maybe they're running into it because it's some safety. What I'm more interested about is with the S&P. Here's the weekly chart, but basically, what Burry's talking about we're going to a period of deflation, but the Fed's going to try to keep things propped. It reminds me of Japan, right? 1989. That's in the 80s. That's what they did. And funnily enough, they had 30 years of just deflation, and some people call it the lost generation, where housing prices fell. And again, at the time, Japanese real estate, a whole block in Tokyo was worth more than the country of Canada. The emperor's land was worth more than the state of California. I think Japan itself made basically, I think like 30% of the world's real estate was, it comprised 30% of the world's real estate in value, even though it represents like less than 1% of the land, right, of the entire world. Maybe that's where we're going, right? Maybe Japan is the quote unquote best case scenario. But again, they went negative interest rates, and it took about 30 years for them to regain the stock market. Real estate's not doing too well there still, though. It's still people renting because you're not really making much on an equity loan, and if the home price keeps falling slightly every year, why buy, right? Just wait for the prices to bottom. So maybe Japan's the best case scenario.
Vishal, do you mind going to the S&P 500 and scanning through until 2000?
Okay, I'll have to find the.
I want to make a prediction here live. My own prediction.
I love it.
I have to go to trading, not trading accounts, but I have to go to. Let's look at markets.
Here we go. If we can pull up a chart for maybe Max and kind of see from 2000. Oh, there we go.
2000. Let me see if I can make it not a mountain chart, but a line chart. There we go. So we got 2000.
So a lot of people, especially the big guys, Ray Dalio, etc., I've kind of said what we're experiencing right now is a bubble in certain pockets of the market. So, for today, it's stuff like the cryptocurrency space. I don't know which crypto specifically. I won't say all of them, but probably some of them are. Tech for sure in the US is going through its own bubble, and etc. And after the 2000 crash, some of these companies, for example, Amazon was trading at $100 a couple of days before, and then at its low, it was trading at $16 after the crash.
Yep.
And it took those companies 20 years to recover. There's a decade there that was lost between 2000 and 2010, where if you had bought in 2000 and you had held until 2010, you didn't do anything. The market basically didn't move. And we call it the lost decade. And I feel where we are now might not be as high as we were then. The enthusiasm is still a little tapered down, but I feel we're going to have another lost decade just like that, where if you're to buy today, for the next 10 years, the market is not going to do anything. It's just going to be straight and narrow and just like that.
Yep.
And that's going to be the surprising part for a lot of investors, because we don't experience lost decades a lot.
No, and it really does speak to the idea of meme stock investment, right?
Yeah.
The whole grab the dollar now. It's starting to fall apart, that idea, right? Especially like, well, I keep harping on the EV sector just because I've been writing about it. With all the
Yeah.
SPAC entries and the multi-billion-dollar unicorns entering the market with nothing more than a plan to go EV,
True.
we've really mucked up the valuation of what stocks are on board. So there's going to be a normalization. Now,
That's true.
it gives an argument again, too,
Yeah.
of long-term investments. Kids,
Right.
you're not going to make your money back in 5 years, 3 years, 1 year, unless it's a gamble, unless you're playing it like a casino. The real money's made on a 20-year span.
Let me ask Galen something, and I mean, TK, you can answer this, but it's funny, you know, I'm looking at this chart, and here you have basically an uptrend up to 2000, and then obviously, you know, you have that downtrend. You know, I'm not saying it's exactly like this, but it's very similar. You know, if I change this to a line chart, maybe that's the direction we're going to head. So compare this uptrend and then that switch to a downtrend. I mean, if I drew a trend line here, it's probably the same thing. But how about big money? So I want to ask, you know, is big money going to go into, say, safety or value? Recently, I had the chart there of Tesla, but we heard that, you know, Kathy Wood and ARK, who was basically telling us, you know, Tesla is going to 3,000, has unloaded hundreds of millions of dollars worth of shares. I think a very significant portion, if I remember correctly. And even, you remember Chamath
He's completely backed out.
Yeah, he's out of it. And this is the guy
the
that, you know,
components.
just a few months ago was telling everyone to buy it because Elon Musk is the man who's going to solve climate change, and he should be the richest man in the world. And we just found out he sold his position like maybe a year ago.
Yeah,
Wait,
totally.
Zach. I wanna go on a bit of a rant about Tesla because I looked into them a little more just outside, just to kind of see if I'm missing something, and I'm not a precursor with that. But if you bake in Kathy Wood's predictions, she's saying her words, so not mine. Tesla is a value stock if sales will grow at 92% for the next 10 years. Tesla is a value stock if sales grow by 92% for the next 10 years.
How is that even possible?
There's not enough, you know, I don't understand car manufacturing, of course, but I don't think you can sell that much to 350 million people unless they go global and they're the only car manufacturer in the world.
Yeah.
If that is
everybody else stops making cars.
Yeah, exactly.
Everybody buys a car.
And I'm just like, man, if that is true, okay, if you bake that into your price, $3,000 is achievable. It's not even there's no price that's too high to pay for Tesla if that's the prediction. But if you're realistic and you realize that car manufacturers have this humongous heavy thing behind them, that is their property and plant and equipment that's so expensive to maintain over that period, that prediction has to be tapered down a lot. In 2008,
yeah.
Ford, GE, and what's the other one? Chrysler.
Mm-hmm.
Only one of them didn't go bankrupt.
Yep.
Since then, only two of them haven't gone bankrupt, and I think it's Ford and Tesla. But Tesla only has 10 years of 10 years of operating experience,
Yep.
not including.
But TK, are you factoring in the Cybertruck and the dancing AI robots?
That again, I completely discounted that, and I focused more on the sales of their sexy cars. That's what and I'm like, if that grows by 92% for the next 10 years.
You bringing it back? Awesome.
My bad, boys.
Yeah,
no, it's okay.
It's okay, but okay. Now we're and I'll jump in with all fours with TK on Tesla. That Jack and me. I would like to I ask the panel here broadly. Anyone who wants to pick up the question? Have another question from Zach. With the lost decade, are you saying that in the beginning of the decade there will be a sell-off, but towards mid and end of the decade it will level out to a point where it started at the beginning?
Yeah, basically, if you're buying, assuming the S&Ps are trading at 4,000 today, obviously I don't know what the price is for the S&P, and it goes down 80%. A lot of people think, oh, that's not possible. It's happened. it happens. It goes down. It trades at 3,000 whatever.
Say
You purchase
3,000.
at that price at a multiple of at least 15 times earnings at that point. So that's where the market is normalized over a long period. So for right now, you're paying $35 for each dollar in earnings. If it goes down, it's $15 for each dollar of earnings. In the next 10 years, the market is not going to beat that expectation. It's a 10-year period, and the general market trades around the same multiple. So if you buy it at 14 let's say it crashes next year, you buy it at 14. In the next 10 years, you're expecting to make close to 0%. And if you factor in inflation, you're actually not making money if you buy on today's high valuation. That's my prediction. So it's you're gonna buy today because you're expecting the future to be great. It dips down, you either sell or you hold. And if you continue holding, you're not going to do anything for the next 10 years if you're buying at today's valuation.
And I think, we got to mention, right? Like, markets don't move up forever. There are years where there's going to be a bear market. Again, I don't know how long that's going to last. The reason I use the Japanese case is because everything is very similar, right? High stock markets, real estate is elevated as well. And basically monetary policy, that's the biggie, right? The Bank of Japan is at that point where, they kept interest rates so low and they thought that would create growth, and they knew that a hike would be pretty bad. And we're at that sort of same period, I think, and that's why there's a lot of people that, are pricing in that rates might be negative. Maybe we follow Japan and Europe rather than hiking them, because with all the and I had that debt clock there, because with all that debt out there, even a small interest rate hike makes it tough for the government, right, to pay back the debt as well. So I think factor that part in about Japan back in the 80s. And a funny thing was, I think what we talked about it, Galen, but it was Nissan that was the largest car manufacturing company in the world at the time. Yep. They basically slowed down their car production because in the 80s it was much more profitable for them to trade Japanese stocks than make cars. So sort of a similar parallel to maybe Tesla buying Bitcoin rather than producing their cars.
Yeah. And it's happening now. There's a guy on YouTube I watch, and he's part of this group in the US, and he was talking about the Venezuela situation with Bitcoin, and he's saying of the companies in the S&P, only 36 of them have Bitcoin or some sort of crypto asset in their balance sheet. Only 36 of them. And he's saying once they start picking up more of the coin, that's when people realize the true value of it, EDC. And that's his prediction. He's predicting that Bitcoin's price should go to $1 million or something, like somewhere. Yeah. somewhere in that area. But he's I forgot his name, but he does real estate, and somehow now he's a Bitcoin connoisseur as well. So
sounds about right.
Joseph, what do you think about this?
What's that?
What does Joseph think about this?
True. $1 million per coin.
Joseph thinks he wants to hold on to his Bitcoin for a little bit. It actually becomes really hard to predict what's going to happen with Bitcoin the next few years. I mean, we can't even predict what's going to happen with this pandemic and how it shapes up. So, I mean, people seem to put money in or take money out based on a whim. Like, we had a hamster this week who outperformed the S&P just on pure random chance. I mean, so how is exactly possible to determine what's going to happen in this market?
That's true.
No,
that's true.
Very true. And I always put forward too, that's a funny meme. I always put forward too that the hamster wouldn't have had as much success if it had actually been trading regular stocks.
Of course not.
There was a tremendous upward volatility in cryptocurrency.
It was kind of biased on one side.
I think for stocks, there was like a monkey before, or an octopus or something that was trading stocks. I can't remember.
It may very well be the case, right, that perhaps a random put. But again, all of that's based on a bull market, right?
Right.
Long term, probably not the same thing. Now, I got one more question from Zach, guys. I wanted to get this happening here. So you said, okay, I see. So in theory, you could just buy puts and play the downside long term. or is there a different way you'd play? Just interested in learning and hearing others' opinions.
So as a trader, that's what I'm expected, like what I'm going to be doing. I mean, obviously, you can buy puts as a trader, or if you trade CFDs, you can short the market. For long-term wealth, that's the thing, right? Is that money going to go, say, to crypto? Is that money going to go to gold and silver or commodities or hard assets for safety? That's, the big debate, right, going forward. And again, Galen, you mentioned this a while back with United Rentals, but look for these value stocks, right? Coca-Cola, I don't know, Kraft Heinz, Campbell Soup, something that people are always going to be spending money on, and that stock pays dividends. I like grocery stores like Loblaws, Superstore here, Walmart, Costco, Starbucks, I guess.
That's true.
That might be something, right? But companies that are well established, paying dividends, and you can say for sure with a high degree of probability that they're going to be around 10 years from now.
That's true. I would play it kind of the same way. And then if, you're one of those people who likes activity, I would sell put options when people are most fearful. And essentially this technique is like you're an insurance company, essentially writing policies on the market. So for example, if the market goes down, you write a put contract because people are in demand for those contracts, trying to bet on the market going down. And what you do is you get a premium from writing that contract and only execute the put option if the person who's obligated to buy puts in that request. And if you really think about it, at that point, you're buying the US S&P 500 at a discount. So it's depending on how you want to play it. If you want to own the S&P 500, you could do the puts, you can buy the puts and just get the downside, or you can write the puts and get income, and you can own the S&P 500 at a lower valuation. But your risk with that move is you're exposing yourself to buying a certain amount of the S&P 500.
This is some hedge fund shit here, right, man? This is some big hedge fund stuff.
Yeah.
I was going to say, TK, would you buy the VIX though?
I actually use the VIX to use the strategy. So generally when the VIX has more volatile, or they're correlated in a negative way. If that correlation increases, that's when I start writing put contracts on the S&P 500. So it's just you can do it with individual companies as well. Yep. You're essentially, someone is paying you to wait for the right time to buy a price that you want, basically. So you're an insurance company. You're writing insurance contracts.
And I haven't looked at like long-term option puts right now in markets, but I would say they're probably pretty cheap right now.
Yeah, especially the last few. Yeah, they're probably pretty cheap.
If you want to start, I mean, long-term, have it for a year or 2 years out. You're probably paying maybe less than $100, man, for a contract. I'm assuming.
Contract. That's true. I think it's probably the best thing to do right now, unless you're one of those people who's deep and looking at different companies, different sectors. I know a lot of people are looking at the commodities, people are looking at uranium. And specifically in Canada, it's something I'm looking at more now, especially because of all the numbers that are coming out that are not too great here. I know there's a lot of turmoil with some of the companies. So for example, I love this company called West Shore Terminals. The ticker is WTE. And it's a coal distributor, basically. It doesn't actually own the coal, but it just ships it to mainly Asia. And it's mostly steel-making coal. It sounds boring. It's not as fancy as, a high-tech EV company or cloud computing, but it's pretty, solid. It's a pretty solid business that's there. And I think year to date, it's up. I'm not too sure. I haven't checked in a while. But that's how I'm playing the Canadian market, especially with some of the numbers that are coming out. A lot of people don't like the coal side because, it's still it's the dirtiest, energy we have. But most of their coal is for steel making. So it's not for the energy production. So that's how I sleep at night.
We are coming to the end of our time.
Oh, geez.
Oh,
I know.
Sorry, Joseph.
Sorry, Joseph.
Any comments from anyone before we close it out?
I got one. I don't want to steal Joseph's thunder. I'll let him lead right into it. DeFi, it's a very confusing concept, and I don't think it's anywhere near being able to be implemented in any kind of real world manner. Mostly illustrated by Compound's recent giveaway to its users of $90 million, and showing that it's completely unready for this kind of application. The owner of the company has threatened users with doxing them if they don't return the cash. I'm sorry, guys. You took the risk. You created something that it's through the machinations of blockchain and of decentralized finance gave away your money, not the customer's fault. Sorry.
Well, first and foremost, it's awfully easy to pinpoint one bad apple and say the whole bunch is rotten. But from what I've seen in the DeFi sector, and I've actually started delving into it, they're really, really young. They're really new at this. A lot of the folks, there's a lot of froth and a lot of people, there's a lot of enthusiasm, a lot of hype, and I don't see a lot of security measures being taken, and they're going to run into a lot of problems in the future. But there are some well-meaning individuals involved in the sector who could potentially make something out of this in the future. Now, we're going to see a lot of people floating down the river before that happens. But eventually, I think this is going to be a real and viable alternative.
There you go.
Perfect.
My infrastructure.
I'm going to end on that note. Thank you so much for tuning in, and we will be back next week.
Awesome. Take care, guys. It's been a blast.
Take care.
Buy the dip.